Hello everyone, welcome to another session on dollar INR. Today the markets are closed due to Buddha Purnima, but yesterday the markets were open and it was a really exciting day yesterday. Let me take you through what happened yesterday, and I want all of you to focus and zoom on this particular candle that was formed yesterday. Okay, the markets opened at 95.02. Okay, it went as high as 95.34. Remember, that is the new all-time dollar INR high. The previous high was 95.22. Yesterday it went to as high as 95.34. Okay, but it came substantially lower and ultimately closed at 94.90. Okay, so lot of action here. The prices went higher, met a resistance at a very close, very close to the level which was previously, and then closed much lower. So we have a long upper shadow from 95.34 to 95.02, and the body is relatively very small from 94.90 to 95.02. So just a 12 paisa body, but a 32 paisa upper shadow. So that is a very important candlestick formation. It's called an inverted hammer, and that formation, which has happened very close to the previous peak 95.22, so that tends to suggest that this is some kind of a resistance zone. Okay, so very interesting candle that has happened here, and now let us come back to the full chart, and I will show you the offshore chart as well. Remember, this is the onshore chart. Let me get back to the offshore chart. Okay, let me just clean this up and let me come back to the offshore chart. This is the 24-hour offshore chart. Very similar, slight price differences, but remember this double top kind of formation that has happened here, and this is the hammer that I showed in the onshore chart. Okay, so it is a peak, two peaks very close to each other and separated just about by about a month's time. Okay, so if you look at the Bollinger Bands, this is the upper band, this is the lower band, this is the middle band. The prices have reached the topmost band. Okay, let me clean this up. Yeah, the prices have reached the topmost band, and that is why the percentage B bandwidth indicator is here at a very high level. Okay, now this tends to indicate that there is some resistance around the 95-95-30 region. Okay, now let me come to the other chart as well. Okay, if you look at this another offshore chart, again the 24-hour chart, we are following this upward sloping linear regression channel. We are also looking at that the prices are significantly higher than the moving averages. These are the three moving averages that we follow, and the prices are significantly higher. If you look at the momentum indicator of RSI, very close to overbought, and even the MACD is at a price extreme. So if you look at it price wise, it is at a price extreme and it is very close to the double top. It's formed a double top very close to the previous all-time high and an inverted hammer at that double top region. So if you look at technically, it indicates that we have reached a resistance at around 95-95-30 region. Okay, since it is a resistance, there is a good chance that the prices might decline. But remember, a lot of it on the exchange rate dollar INR is driven by crude prices, and crude prices are still around $110 to $120 a barrel for Brent crude. Okay, that is really very high. Okay, so if crude prices does not cool off, it is difficult for the rupee to recover or the dollar INR to come down. But technically speaking, this is at a resistance zone, some kind of a double top formation and an inverted hammer at the peak. So 95-95-30 could be a resistance. So that said, what should exporters and importers do? Dollar exporters should certainly look to hedge. Please look to hedge using both forwards as well as vanilla options. I have shown in my last two videos how the option premiums are much lower, much cheaper. So you need to look at doing vanilla options. It is a very good level. Obviously 95, 94, 80, 90 are very good levels to use some protection and to capitalize and cash such high levels. So you should do forwards and some degree of vanilla options for flexibility if rupee further weakens. Okay, that is for the dollar exporters. For dollar importers, it is obviously a very difficult time. It has been a very difficult time for the last 1.5 to 2 years. Rupee has been consistently weakening. So dollar importers should also hedge. But looking at the fact, technically, if I feel that prices might correct, then it makes sense to use more of vanilla options. Okay, you pay that premium and secure the maximum rate. If rupee recovers from here, and then you will be able to participate in that rupee gain. If you do a forward, you get locked in at that price and you will not be able to participate in rupee gain, but forward will protect you from rupee weakness. Okay, but options will protect you from rupee weakness. It will also help you if rupee recovers, and obviously that comes with a cost. Forward does not have any specific cost. But that said, please do focus on the Brent crude oil prices. That needs to come down for rupee to recover. Okay, so extraordinary times, you need to look at some options to hedge, because that is the new instrument, that is one that will provide you flexibility. Okay, so that is it from my side. Have a great weekend ahead.